And now time for Development Debates, where we dig deeper into some of the questions shaping the future and present of China. Today we will see Chinese experts discuss on the new normal for China's economy. The financial crisis in 2007-2008 and the ensuing recession have forced not only Americans, but also people around the world to adapt to a new normal. Chinese enterprises and investors have been adjusting to China's economic growth of 10% over the past 30 years. However, now things are changing and the growth is slowing. According to an earlier announcement from National Bureau of Statistics of China, China's GDP in the third quarter has only gone up by 7.3%, which was the lowest growth over the last 5 years. In order to discuss how to boost China's economy under the new so-called normal trend, a new generation of economists will gather together in Beijing to attend the China Capital Market Annual Conference. The topics will include strategies for transformation of China's economy, capital market innovation, and much more. What are the exact features and definition of the new normal for China's economy? Different economists obviously have their different ideas. Li Daokui is an economics professor in one of China's top universities. He believes China's new normal is not just about economic deceleration. In Li's opinion, the new normal is not only about the fact that the economic growth rate is declining and China's debt levels are adjusting. This analysis is only focused on macroeconomics. Li thinks that there are 4 features of the new normal for China's economy. First of all, new growth points are alternating with old ones. The export and real estate industries are 2 so-called old growth points. They will eventually be replaced by infrastructure investments and household consumption. Secondly, China's economic structure adjustment is a gradual process. This will take some time to sort out. Thirdly, this revolution or change is causing difficulties since some government officials are afraid a revolution will result in conflicts. They are not willing to take immediate action for fear of upsetting the system. Lastly, China is now taking a more important, larger role in the international economic arena. Meanwhile, another famous economist in China, Lian Ping, shares his explanation of the new normal. He mentions 8 features of the new normal. First, the economic growth rate of China is decreasing. The economic growth rates for the past 2 years were 7.7%. And in the first 3 quarters of this year, the economic growth rate has dropped to 7.4%. Second, low fluctuation of economic growth rates are present. Economic growth rates have fluctuated between 7.3% to 7.7% since 2012. Third, now the job market is stable. 10 million jobs have been created before October this year. Fourth, China has maintained low inflation rates for the last 2 years. The fifth reason involves risks. The public has shown little interest in real estate investments, which is a main influence on China's economy. The price of industry products are dropping continually, and this limits industry added value. What's more, the Chinese government is adopting limited macro regulation policies to stimulate the economy. The 7th point is the industry structure keeps optimizing. The added value of tertiary industries accounted for 47% of China's GDP in the first 3 quarters. And lastly, overall economic prospects are promising. The new normal doesn't necessarily equal an economic recession. The public should embrace the new trend. Searching for new ways to boost the economy and keeping it stable under the new normal trend is of great significance.